The S&P 500 and the Nasdaq 100, we're going to break down exactly what happened into today and what we think is going to happen going into tomorrow. It's important to know tomorrow you do have PCE data. And sorry, I left you a little bit on a cliffhanger yesterday, but yesterday I didn't put in the comments that when that was happening, and it's tomorrow. So let's look at everything that's happening. So we had GDP. Now, GDP came out halfway decent. It wasn't terrible, wasn't anything like that, just a slight beat, but the market didn't like it. So I want to talk about exactly where we are right now. So if we look basically here on the daily time frame here on NQ, I want to highlight the importance of supply and demand, people, because this is really all we're doing here. I follow and monitor basically volume, supply and demand, and then the fundamentals of what's happening in the market, and then I trade based on that. The end. And if I look at what's happening here, let's talk about it. So if we see on the daily, we broke below this 11.4 major level, retested, shot down, and then retested again. And then over the past 4 days, nothing but downside. Going in from this, we hit our supply here on the 4-hour chart. On our demand, you come back, you can see that clear demand. And I've been highlighting this for days for y'all, right? I don't change anything here. It all stays the same. So you get to know and understand exactly how we're trading here, right? Now, if we go into ES, there is a little bit of a tricky thing going on here is ES has not came down into that said demand yet, right? You still have a little bit of room. This is the big question mark here, but I'm going to talk about and kind of walk you through what I'm looking at here in the market. Before we get into that, I have to do two things: like and subscribe. Every single day I make videos for you so you are prepared and you know how I am trading and what I am looking for also. And if you are interested, the Twitter link is down below. You get to see everything that I'm doing. You get to see all the trades, what I'm looking at, big moves going forward, and I'm probably going to have some big charts going on there tonight also. Then on top of that, last thing, the Discord. If you're interested in learning about how to trade, what we do every single day, I recommend you hop in the Discord. These are some trades that we've mentioned, and I mentioned them all here on YouTube first. So not only am I taking them, right, and posting what I'm doing there, but I also share them for free. So if you listen closely to the videos, you're going to get all that content right here absolutely free. You just have to put in the work. You got to make sure you're listening. Let's get to it. So jumping back in here, and again, we have a little bit of time left here on the day, but I just want to talk about where we're at. Now, one, I will say right now, I believe NQ is somewhat leading the market, right, because we hit demand first. Now, we can look a little bit across the broad market at Dow also. You can see everything's getting hers. Dow did not come into that demand either, but we can see NQ did. If we look at this, I want to warn everyone about being cautious. If there's anything on the market that's led us to get nice bounces, it's been inflation reports as of this month. PPI, CPI, those both led to really great bounces. Now, I'm going to say this right now. Going into PCE tomorrow, the Fed has categorized PCE as the most important inflation data, right? So I do want to highlight that out there first. I want to make sure everyone knows that. So I'm not saying you're going to pump tomorrow, but I'm just saying based on previous reports, I think being liquid right now, which I'm liquid for myself, I have a few runners left on my positions, but their stops are basically break even. I think it's smart to be liquid for myself. That's what I'm doing. Now, there's some really great setups I'm going to show you right now. And honestly, I'm going to tell you right now, going to the end of the day, it was extremely hard not to buy some of these setups because there's some of them that I love. And I'm going to show you here in a second. But before we get into that, let's talk about VIX. We mentioned VIX also yesterday. As you can see, we came right down to that key level at 20 to 19 range. I mentioned it yesterday. You came in. I said, probably going to trend here for a little bit, but we didn't. We didn't trend. And we bounced right back up. So played out great. Our Apple puts, which I mentioned yesterday, did fantastic. Those ran almost 80% roughly. And we're sitting pretty. Can't be no complaints there. And just to give you a better look at what's happening with those apples as we come in here. Let me go down really quick right here. You can actually see, just so you know I'm being transparent and honest. I post the winners. I post the losers. Everything in between. So yesterday I posted right here, entry 435, 440 for the 135 puts. Today they got all the way down to, I believe I stopped tracking them after 7.4. So they ran up like literally crazy. So that's what we're looking at there. No trades now. Looking at VIX, you're popping up. You're getting that volatility right now. Now I'm going to tell you right now, sellers are in control. And why do I think this? Why do I say this? Heavily based on volume. I want to be very, very transparent here. If I come in and I look at Yahoo Finance, again, this is where I like to track this for you, okay? I want to be very clear. Going into SPY, you're going to end your volume higher than yesterday, 100%. So you're coming in for 15 minutes left. You have about 75 million. Going to after hours, I'm just telling you it's going to stack in. So I figure around 85, 86-ish by the end of after hours, most likely. So I do think more volume will stack in here and in the last, 10 minutes, which most of that volume comes in. So again, you did have good volume today. It was better. I think your 30-day average is around 81 million, so you're going to surpass that most likely. So if we look further, I'm going to just tell you, over the past few days, what have I been talking about and observing specifically? Heavily, I've been talking about what's happening with volume. And when we look at what was happening in this downtrend, anytime you got buying, it was minimal buying, minimal buying. All your breakout extended volume or abnormal volume was to the sell side. And this is easily identifiable when you look at something like TOS and you can start identifying what's happening here. And that was just my opinion, right? I've given you a lot of examples and you can just see that happening. Even here at the end of the day, I believe this price action is very bearish. You're basically going to end the day rejecting at 11,000 on Nasdaq. That's weak. Everything's telling me right now that the continuation of the downside is there. The only concern and cloud of judgment that I cannot bet on right now is because PCE. But as I go into some of these plays, I'm just going to show you. And I want to be really clear. PCE goes bad, you're going to hit 52-week lows probably immediately. You'll hit them tomorrow most likely if PCE goes bad. And those 52-week lows are right here at around 10.5, 10.4-ish. So I'm going to tell you, you're going to have opportunities to get into plays in my opinion. That's just what I'm looking at, how I'm trading this, and how I'm moving forward. Favorite plays right now. Microsoft is it right now. So we talked about NVIDIA, and I'll show you NVIDIA. You had that massive just tank. You just dropped from 165 all the way down to 149. You've had the massive drop on Apple yesterday. We had a really good drop from basically, we got in around 136 all the way down to 130. These are playing out great. I think Microsoft is the next man up, right? If we look at what's happening here, let's talk really, really quick. First off, you broke down our key level. I'm going to tell you right now is 138. This is the big level you need to be watching. It's basically right here. This is your main big level. I come all the way out to the weekly so we can identify this for you, and I can show you exactly where this goes back down to about right here roughly. You can see it right there. This is that swing low you had. This was also a big level around 246, 247, but I want to highlight that, and you have another level here at 233. But zooming back in so you can see what's happening here. Buyers started, pressuring you back up from 234 back in 238, and now you're rejecting. So it's a clear break and retest. You have a daily gap also, just to let you know, you have a daily gap down to roughly 230, I believe right there. Yes, November 8th. All the way down here at 228. So you have a 228 daily gap also. And again, I do believe Microsoft is going to want to try to fill this gap very soon. And again, if you start to see a sell-off from PCE, Microsoft is my favorite play that there is. I'm going to be hammering puts down to 228 personally if PCE goes bad tomorrow. Okay, transparent, crystal clear. Next up, I'm going to highlight Tesla. This thing just got brutally assaulted. People on Discord, we were trading it today. Jay Ream, that was his favorite play of the day. Overall, though, the safest sector on downside, in my opinion, in the short term or medium term or even long term, are going to be banks. These guys are in pain. They are going to hurt. You can look at someone like Citigroup. I've been highlighting this. You broke down from basically 44.5. Today, you came into supply, or demand, which I've been mentioning, down at 42.8, and then you bounced up. Contracts, so you can go look at them, how they moved basically 2 weeks out, 3 weeks out. They all went up 100% there, worth mentioning. So you're getting some buyers off this, but in my opinion, still think you're going to come test 52-week lows as rates continue to raise, as rates stay where they're at also. There's not going to be any cuts. You're going to see more and more pain and more, I think, just overall decrease in revenue for banks in the long run over the next year. I think that's what you're going to see. I think it's the sector that has probably the most pain on the outlook. That's my personal opinion. So if we're looking there, that's what you need to be looking at. Now, semiconductors have had some nasty plays. I've had a lot of downside there. I don't want to keep my focus there anymore. I definitely have to move on. My new favorite play here also, Microsoft, number one. Number two is going to be Nike. If we come into something like the one-day chart, I want to highlight where you're at. You have a clear supply that you tested yesterday. Okay, I'm going to highlight this right now. You could argue that supply is actually up here, possibly, but again, I believe it's right there. So it's a big range. I'm not going to lie to you. Basically like 119 all the way up to 123. So I think you have to go dated here. But I think Nike has pain on the horizon, okay? So if we start to see any type of good movement tomorrow, I'm going to be looking at Nike for longer dated positions. I don't think the bear trend is over. I don't think anything like that. but I'm setting myself up for positions. So if tomorrow's data comes out good, I think I'll be looking to settle in for a position on Nike dated. Okay, I'm going to be really transparent. If it comes out bad, I'm going to look to start riding something like Microsoft to the downside heavily. I want to be very crystal clear. Even here into the day, look, you're seeing buyers step in even further, right? Like we just talked about, because I believe there's a high possibility PCE comes out good tomorrow. But again, I'm not rolling those dice. I made my money today and I'll make my money again tomorrow. But again, any type of upside you see on Nike, I believe is a good opportunity for myself and something that I'll be eyeballing and definitely keep my focus on. If you want to know my thesis behind Nike beyond just the chart, understand their inventory is overloaded. People keep saying, oh, well, there's holiday sales. They just announced that they think Q4 sales will be worse than Q3. So they believe a holiday season sale of Thanksgiving into Christmas, right, will be worse than a Q3. That's terrible news. Their plan is to liquidate these items that they have basically a mass overload of inventory, but they couldn't do that in holiday season. So this is extremely concerning. I believe they're in pain. I don't like Nike. Definitely have a lot of downside here. I think it's consumer discretionary that they're in. Something like Target as well. I mentioned them yesterday. Look at that. They got killed. They got pushed down to 139 today. Target, definitely on watch for downside break also. Now, a little bit more fundamentals here for you guys. Going into something like yields. Again, you need to be watching this specifically. And I believe this is really interesting how we're shaping up into tomorrow. If we look at what's happening here, again, like I keep saying, when you get stagnation here on yields, you get really good volatility 9 out of 10 times shortly after this, right? You get that stagnation a little bit, then a lot. Stagnation, volatility. You know, you can go back stagnation, volatility, stagnation, volatility. This has been one of the best indicators for looking at, you know, the scale of what we're getting into a recession, getting into a major pullback and weakness on our economy and inflation. Okay. So it's really interesting that this is set up. And again, if you're new to the channel, this is a 2-year trend since 2020, the 10-year inverting over the 30. It's the most important in my opinion. I don't care about the 2 over 10 or whatever. Those are important, but they're not as important as this one in my opinion. Go look at other cases. Again, I like to show you 2018, very big when you had that big drop. You can go back to the 08 bubble. You can go to the dot-com bubble. You can go over and over and over. So if we look here, it's interesting. This is lining up with PCE data. If there's been a bear thesis going into PCE, this is it for me. The chances of this happening are really weird. They're slim. And the fact that you just continue to hold this trend is huge to me. Is there a chance you drop down? Yes. Again, this isn't a strong enough thesis for me to start hammering, puts, right, on the market. So I have to watch and let this play out. But this is extremely interesting, in my opinion, going into this data. I definitely think if PCE comes out bad, that it could spike what's going to happen here with yields. I think it's a very big cause for concern. I think you have to be paying attention. Going into DXY. A lot of people have been asking about DXY. Again, I said the next big level where you have support is going to be down here. This is your major level, 103.8, basically down to 103 flat. This is your major demand level or zone, if you want to consider that. You can actually get rid of this if you want right there. It's actually going to be, I can clean this up. I don't know why I did it like that. I can go really quick and show you what I'm looking at here. You had to come right here, go all the way back, and you can see this is your area right there on the daily time frame, and you're right in it. You're holding the level. It's huge, right? It's right there. You're finding support on the dollar, but it's worth mentioning what's happening right now with the dollar. You're being attacked from China, being attacked basically with the Japanese yen and what's happening with them going back on with their policy, which never happens, but that's happening. So you have a lot of factors weakening the dollar right now, but the dollar's still holding this level. So this is interesting. I will say that. Your next level is going to be pretty deep down here, in my opinion. You got to be watching this area. Pretty disgusting, if you ask me. That's your next level to be watching. But right now, dollar has a little bit of strength. I wouldn't be surprised to see the dollar get a bounce here with some bad PCE data also. But again, the dollar has not been one of our top indicators for some time, ever since you broke down below the 109 area. Again, I told you after that, that's when you had to kind of shift your viewpoint and thesis away from the dollar, because it would cause you to miss out on a lot of downside opportunity, which so far has been an overall good viewpoint to be looking at. Next up, the last thing I want to talk about is what happened here with Apple. And I want to show and demonstrate why these things are so important here. I don't ever like to talk about things to say, I'm right, you're wrong, follow me, subscribe to my Discord, right? I don't like to do that. I would rather educate you and you not join my Discord, right? I would rather have a good reputation and you say, I like Tyler. I'm going to watch him every day. I may not sub to his Discord. I may not, do anything like that, but I trust what he says, and I don't think he's going to lie to me. I don't think he's going to manipulate. I don't think he's going to say things just to say them. When we look at what's happening here on Apple, I think it's really, really important. We talked about this, pin that you had formed from 2020 through 2022. And I just want to highlight what's happening here now, okay? Understand what's really taking place here. This is an extremely strong higher low trend you had established, and you're breaking out of it. If you break below 128, it's confirmed, and I think it's going to cause extreme selling, okay? What did I say was important about this, though? I said this starts to break down, we're going to start seeing SPY really show weakness, because prior to this breaking down, what was happening with SPY and QQQ? The Qs were a lot weaker than the SPY. However, over the past, this is the weekly chart, 2-3 weeks, what's happened to SPY in comparison to Qs? It's been playing a lot of catch up, guys. A lot. You've dropped from 410 down to basically 370 in a matter of 2 weeks. A 40-point drop. We look at something like Qs. Has Qs dropped? 100% it has dropped from 296 down to roughly 260, right? 262, right? About a 33-point drop, right? Still big, still important. Q's probably a little bit less percent-wise, but I just want to highlight the dangers here right now for you. And I do think, as you see these big FANG names get hurt here, it can cause a lot more volatility and a lot more pain on the market when we drop this time around, okay? That's my personal opinion. And you're seeing these names start to really break out of these trends. The last thing I'm going to show you is the Big Six chart, right? This is on TradingView. This only really cool thing about TradingView is you can make your own little ETFs. This is the Big Six. It's Apple, Microsoft, Nvidia, Google, Amazon, Tesla. You combine them all and make your own little mini ETF. Look at the price action here, people. I'm not making this up. This is just what's happening. We talked about what happened. This is when we trade the upside going into July. Remember, we traded that upside, came back down. You rejected off that level there, came back down, quad top, dropped down. This is arguably the weakest you've looked in a long time here. You could argue you're forming an head and shoulders to the downside. It's just ugly no matter how you look at it. And you have to anticipate more downside overall here. And I just want to highlight how big and how weak these equities look right now specifically. Any influx of bad data can really lead to a massive drawdown here. So again, I think it's very important as you look at the market right now, look at it from an unbiased standpoint. Look at it from a standpoint of how can I make money in this market? But how can I make money with the least amount of risk possible? I want to be able to risk the least amount of money to make the most amount of money, which I know seems really, really easy, but I want to leave y'all with one more thing also, something I posted earlier. And this really goes for everyone here. I'll be making a post probably on Twitter later about this. I've been seeing people unsub from Discord and people really trashing YouTube lately, which is unfortunate. And my thing here is I would love to see you guys succeed. I would really love it. I don't want you guys to fail, but I'm a big firm believer you can lead a horse to water, but you can't make them drink. So what I'm saying is not to offend anyone or be sarcastic. I genuinely want everyone to succeed and really try to make sure everyone understands how and why I take trades. I'm very big on pushing why I trade things, why I get in, why I get out, and that knowledge behind it. I want people to understand that. It's good to ask questions, okay? The past 3 months has been arguably my most successful trading months in my career. The only change I made was patience and taking trades based on low risk. This has resulted in usually one trade a day, sometimes even none. And this is the real reason why people are getting mad. They're mad that I like to swing. They're mad that I take less trades, right? But I'm just being transparent. I'm being myself. I'm not going to post something that I'm not getting into, right? That's why there's never been a complaint about me on Twitter or someone saying that I'm stealing or manipulating or lying, right? I can post all my trades if y'all need them. Almost every trade I've entered has been up almost 10%, but sometimes based on risk reward, I wanted more profits or wanted to take more profits. The moral of the story here is to focus on quality, not quantity, right? It's just because if I'm looking to risk, 10%, then I usually want to make at least 20%, right? If I'm looking to risk 20%, I at least want to make 20%, right? Based on my stops. About 1 week till the beginning of 2023, I challenge you, and I'm speaking to y'all as well. Whether you're leaving Discord, whether you're leaving YouTube, or you're staying here and you're focused on getting better, you're focused on more education and becoming the best trader you can be, focus on quality, people. Stop taking 5 trades a day that you think look good. Rather focus on coming into the market on taking one trade. Take that one trade that's going to really give you success. I would rather make 20% on maybe $1,000 position than take 10 $500 positions and only make 5% on each trade, right? Because chances are you're going to lose also. Give yourself room to lose. You need to understand that. Take one trade that meets the requirements, that shows the risk reward is in your favor. For instance, you're looking to risk 5% to maybe make 20%, 25% on an option. Getting rich quick is the ultimate scam. It isn't going to happen with my Discord or someone else's. You're not going to get rich quick. And I guarantee a Discord will not make you successful. In the end, it comes down to you. I don't care if people unsubscribe to my Discord. I don't care if you unsubscribe to my YouTube. I genuinely want you to be successful. I genuinely want people to understand you got to put in the work to be successful here. So going into Christmas, going into the end of the year, I really challenge people to take a step back and look at what you've been trading and say, am I really putting in the work right now? Okay? Really think about what's taking place here and really think about, are you responsible for the results and what's happening? I'll see you tomorrow. Have a good one, traders.